add this to your portfolio to protect against downturns in the stock market. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show as always. This is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from this beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, share button, and the bell icon to get notifications as the videos drop. But as always, I meant to say, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So let's jump straight into it. So as of currently today, the market has dropped another 1,000 points in a day. Been a very wild past 2-3 weeks ever since the coronavirus outbreak. And I know when you're a bull out there, meaning you're a long-term bull, you're a long-term person, you start to wonder, man, what is going on? Every time the market dips, you buy some. Next thing you know, you run out of cash. You don't have cash to buy anything else, and you're sitting on the sidelines. You're happy when it goes up, but then it crashes back down the next day. That's what's happened in a bear market. In a bear market, it goes up a little bit, but then it comes down even harder. It goes up a little bit more, it comes down harder a little bit more. So when you're a long-term bear, especially a long-term bear, I meant to say a long-term bull. When you're a long-term bull, meaning that you believe the market is going to go up in the long term, and you're buying as the market is going down, you become discouraged, you run out of cash, and you're saying, man, what do I do? You're just sitting back playing a waiting game, waiting and hoping the economy will return. Next thing you know, with all the bad press, when you see your portfolio just go down more and more and more, next thing you know, you're going to consider about selling certain things. Then next thing well, let me take the profit on this. Well, let me just sell this much and let me take this out. And then 2-3 years down the line, or a year or so down the line, you're going to be kicking yourself. So, Prince, long story short, what can I do in the meanwhile? What can I add to my portfolio? And why would I add to my portfolio to take advantage of the bear market? So the market's dropped 1,000 points today, right? Even though the market has dropped 1,000 points, you can see here this has gone up 10, almost 11%. This is a leverage bearish ETF SPXS, Sierra Papa X-Ray Sierra. So today it's trading at $18. Yesterday was trading at $16. So what I do, I like to look at this as like a little insurance policy. Like let's say if I got a portfolio worth $10,000, right? And 990 of those dollars are in stocks that I predict to do better in the future. But I would take, let's say, $100 or $200, and I just invest into this. I just buy this. If the market goes up, this goes down, I lose $200. Who cares? But if the market crashes while I'm holding my bear portfolio, which will happen while I'm holding my bullish portfolio, which will happen in the long term, for all my people who invested for 10, 20 years down the line, you can bet your bottom dollar a market crash would happen. So if the market crash would happen, what will happen to this particular thing? So let's take a look. Let's go to the max here. And let's see, the last crash, major crash we had was in 2008. As you can see here, you can look at my button. This thing was trading for $11,000 on February 27, 2009, which was considered the bottom of the market. At the bottom of the market, this thing was trading for $11,000. So if you put this at the bottom of your portfolio, and let's say the market in 2008 was to happen again, the value of this just runs through the roof. Let's say if it goes up to $500 or whatnot. Guess what? You made more money. You can sell that and buy more and become more bullish. Buy some more bullish things. Buy more stocks. So if nothing happens to the market and this thing and the market just goes up and you lose all the money you put into this, you lose your insurance policy. I look at it as an insurance policy. Every month I pay $200 worth of car insurance. I pay for my car insurance. If nothing happens, I lose $200. But if something does go wrong, I can get a $10, $15, $20,000 car replaced. So that's what I'm looking at with this. If I'm wrong and the market just continues to run up, good for my overall portfolio. I lost $200 on the down end. I'm cool with that. But if my portfolio starts to crash, while I'm holding on to my stocks, I could be cashing out on things like this. So Sierra Papa X-Ray Sierra, this is not a recommendation. This is just a thought process of something for all my long-term people out there who are watching this market go up and down. and one day they're up, next day they're down, the market just keeps going down. What can you do? How can you profit? How can I still be a long-term bull person but profit on these sharp downturns? And this could be one of the ways, you can look into it. All right. Don't forget to hit that like, subscribe, comment, and share button. Until the next video, podcast, cartoon, book, or whatever else crazy you see me do around the globe. Peace. Be safe. I'm out.